Bitcoin sits around $118,000 in mid-August 2025. That's a 99% gain year over year. But here's the question that's dividing the crypto community right down the middle. Is Bitcoin's legendary 4-year cycle officially dead? I'm about to present you with statistical evidence that will shock both Bitcoin maximalists and cycle skeptics. Because while everyone's arguing about whether the cycle is broken, I've analyzed 15 years of Bitcoin data, and what I found will change how you think about Bitcoin's future forever. Some analysts are claiming the cycle is dead. Others are doubling down that it's stronger than ever. Today, I'm giving you the raw data, the statistical analysis, and my controversial prediction that neither side wants to hear.
Stack it up real high, come here to be in the know. Come here, enjoy the show, cause it's Warren's money time. Let your future shine, yeah, it's Warren's money time. Wealth on the climb, hear that information flow. Stack it up real high, come here to be in the know. Come here, enjoy the show, cause it's Warren's money time.
The case for the cycle being dead. Let me start with the evidence that the 4-year cycle might actually be broken. And this data is going to surprise you. First, the timing is completely off. Historically, Bitcoin reaches new all-time highs 12 to 18 months after the halving. But this cycle? Bitcoin hit a new all-time high of $73,835 in March 2024, 1 month before the April 20th halving. That has never happened before in Bitcoin's 15-year history. Here's the smoking gun. In every previous cycle, Bitcoin needed the supply shock of the halving to trigger its parabolic move. But this time, the Bitcoin ETF approval drove prices to new highs before the halving even occurred. That breaks the fundamental cycle thesis. Second, the correction patterns are completely different. Previous cycles saw Bitcoin drop 70 to 85% from cycle highs. The 2017 high of $69,000 crashed 84% to $11,000. The 2021 high of $69,000 dropped 77% to $15,476 in November of 2022. But this cycle, the maximum drawdown has been only 26%. Bitcoin's lowest point after hitting 73,000 was around 57,000. That's barely a traditional correction, not a cycle-ending crash. Third, the institutional game has changed everything. MicroStrategy, BlackRock, Fidelity, and now even sovereign wealth funds are accumulating Bitcoin. These aren't retail investors who panic sell during corrections. They're long-term holders with decades-long time horizons. Matt Hugin from Bitwise Asset Management told CNBC, "I think the 4-year cycle has come to an end. The forces that historically created the 4-year cycle are weaker than before, and other powerful forces are operating on a different timeline. The data backs this up. Bitcoin's 1-year realized volatility has dropped to historic lows even as prices hit new highs. That's the opposite of what should happen during a cycle peak. But hold on. Before you write off the cycle completely, let me show you the statistical evidence that suggests reports of its death are greatly exaggerated. If you're finding value in this analysis, you need to know about my free newsletter on Substack. Every week, I send out exclusive market insights, stock picks, and investment frameworks you won't find anywhere else. It's completely free, and over 2,500 investors are already getting these delivered straight to their inbox. The link is pinned in the comments and in the description below. Don't miss out on these weekly insights. The case for the cycle still being alive. Here's what the cycle bulls don't want you to ignore. Pantera Capital predicted in November 2022 that Bitcoin would hit $117,482 by August 11th, 2025. On August 11th, Bitcoin closed above $119,000. That's a prediction accuracy of over 98%, made 2.5 years in advance using cycle theory. How do you explain that level of accuracy if the cycle is dead? Second, the halving effects are still playing out exactly as predicted. The April 20th, 2024 halving reduced mining rewards from 6.25 to 3.125 Bitcoin per block. Mining difficulty has continued rising, forcing less efficient miners offline. Hash rate initially dropped but has since recovered to all-time highs, exactly what happened in previous cycles. Third, the adoption curve is still following the cycle pattern. Fidelity's research shows that Bitcoin entered the acceleration phase on July 15, 2024, characterized by high volatility and profitability. This phase historically culminates in a blow-off top and cycle peak in the second quarter of the following year, which would be Q2 2025. We're literally in that window right now. Fourth, the macro environment is perfectly aligned for a cycle top. The Federal Reserve cut rates in September 2024 for the first time since COVID. Historically, Bitcoin performs best in the 6 to 12 months following the first rate cut. We're right in that sweet spot. Here's the kicker. Some analysts are projecting Bitcoin could reach $155,000 to $175,000 by August 2025 based purely on cycle analysis. At $118,000 today, that's still 30 to 48% upside if the cycle holds. Statistical deep dive, the numbers don't lie. Let me break down the actual statistics because this is where it gets fascinating. I've analyzed every Bitcoin cycle since 2011, and here's what the data shows. Cycle length consistency. Cycle 1, 2011-2015. 1,415 days from low to low. Cycle 2, 2015-2018. 1,064 days. Cycle 3, 2018-2022. 1,400 days. Current cycle, 2022. Day 1,000 and counting. The current cycle is tracking almost perfectly with previous cycle lengths. If the pattern holds, we should see a cycle top between now and March 2026. Price appreciation patterns. Cycle 1, 5,400% gain from low to high. Cycle 2, 2,900% gain. Cycle 3, 2,100% gain. Current cycle, 660% gain so far, from $15,400 to $118,000. Notice the diminishing returns pattern? Each cycle produces smaller percentage gains, but this cycle is tracking exactly where it should be mathematically. Halving performance analysis. Post-2012 halving, plus 8,200% peak gain. Post-2016 halving, plus 2,800 peak gain. Post-2020 halving, plus 1,600% peak gain. Post-2024 halving, plus 160% so far. If the diminishing returns pattern continues, we should expect another 200 to 400% gain from the April 2024 halving low of around $64,000. That puts the cycle top between $192,000 and $320,000. Market cap analysis. Bitcoin's market cap sits at $2.356 trillion today. Previous cycle tops reached market caps representing 0.1 to 0.15% of global wealth. At current global wealth levels, that suggests a cycle top market cap of $4 to $6 trillion, implying Bitcoin prices of $200,000 to $300,000. The September crash theory, historical pattern analysis. Here's where it gets really interesting. Crypto analyst Benjamin Cowan recently highlighted a pattern that could decide this entire debate in the next few weeks. Historical September performance. September 2013. Bitcoin crashed 35% mid-month before exploding to a cycle high in November. September 2017. Bitcoin dropped 40% before hitting 69,000 in December. September 2021. Bitcoin fell 30% before one final push to an all-time high in November. The pattern is clear. Bitcoin rallies through July and August, crashes in September, then makes one final parabolic move to the cycle top in Q4. This year, Bitcoin rallied through July and August, gaining over 10% in the past 30 days. If the pattern holds, we should see a significant correction in September, potentially dropping Bitcoin back to $95,000 to $100,000. But here's the key. If Bitcoin holds above $95,000 during any September correction, it suggests the cycle is still intact, and we could see the final parabolic move to 200,000 plus by November or December. If Bitcoin breaks below 95,000 and stays there, it might signal the cycle is truly broken and we're in a new paradigm. My statistical prediction, the controversial take. Based on my analysis of 15 years of Bitcoin data, here's my controversial prediction that neither side wants to hear. The 4-year cycle is evolving, not dead. We're witnessing the maturation of Bitcoin from a speculative asset to digital gold, and this transition is extending and dampening the cycle rather than eliminating it. My prediction: Bitcoin will experience one more traditional cycle peak, but it will be different from previous cycles in 3 key ways. First, the peak will be delayed. Instead of peaking in late 2025, I expect the cycle top in Q1 or Q2 of 2026. This is because institutional adoption has smoothed out the volatility and extended the timeline. Second, the peak will be lower than pure cycle analysis suggests. Instead of $300,000, I predict a cycle top between $180,000 and $220,000. Still massive gains, but not the moonshot some expect. Third, the subsequent correction will be smaller. Instead of 70 to 85% crashes, I expect a 40 to 55% correction from the cycle high. This means a bottom around $80,000 to $110,000 in the next bear market. Why? Because institutional holders won't panic sell like retail did in previous cycles. Companies like MicroStrategy and BlackRock aren't selling their Bitcoin because of a 20 or 30% correction. This creates what I call the mature cycle theory. The 4-year pattern persists, but with dampened volatility and extended timeframes. What this means for your Bitcoin strategy. So, what does this mean for your Bitcoin holdings? Here's my actionable framework. If you believe the cycle is completely dead and we're in a new paradigm, you should be dollar cost averaging into Bitcoin continuously without trying to time any peaks or bottoms. Just buy and hold forever. If you believe the traditional cycle is still intact, you should be taking profits on any move above $150,000 and preparing to buy back during the inevitable September correction. But if you believe my mature cycle theory, here's what you should do. Hold your core Bitcoin position through any September correction. Use the dip to add to your position if Bitcoin drops to $95,000 to $100,000. Start taking partial profits if Bitcoin exceeds $180,000 and prepare for a multi-year accumulation phase starting in late 2026. The key is position sizing. Don't bet everything on any single outcome. The beauty of Bitcoin is that all 3 scenarios result in higher prices over the long term. They just differ on timing and magnitude. Remember, even if the traditional cycle is dead, Bitcoin has still gained over 600% from its 2022 low. Even broken Bitcoin cycles generate life-changing returns for patient holders. The truth about Bitcoin's future. Here's the bottom line that both sides need to accept. Bitcoin's 4-year cycle might not be dead, but it's definitely changing. The institutional adoption that everyone wanted is happening, but it's making Bitcoin less volatile and more predictable. Exactly what you'd expect as an asset matures. The statistical evidence suggests we're still in a cycle, but it's a different kind of cycle. Longer time frames, smaller corrections, and more sustainable growth. That's not a bug. It's a feature of Bitcoin's evolution into a mature asset class. September 2025 is going to be crucial. If Bitcoin holds above $95,000 during any correction, the cycle bulls will be vindicated. If it crashes below and stays there, the cycle skeptics will be proven right. Either way, Bitcoin at $118,000 today is likely not the end of this story. Whether it's $200,000 or $300,000 or something in between, the next 12 months are going to be wild. What do you think? Is the 4-year cycle dead, evolving, or stronger than ever? Drop your predictions in the comments. And if this analysis helped you understand the cycle debate, smash that subscribe button because we're tracking this story all the way to its conclusion. If you believe the cycle is still alive, my next video breaks down the exact statistical timeline for when Bitcoin will peak, with specific date ranges and price targets you won't find anywhere else. The most important thing to remember, regardless of which camp is right, Bitcoin continues to be one of the best performing assets of the past decade. The cycle debate is fascinating, but don't let it distract you from the bigger picture. Bitcoin is still winning. Thanks for watching.
Stack it up real high. Come here to be in the know. Come here, enjoy the show. 'Cause it's Warren's money time.